Something really weird just happened in the silver market. Now, you probably know silver is considered a safe haven asset. That means when there's a major conflict or crisis, the price is supposed to go up. But just recently, the script got completely flipped.
So here's the big question we're tackling today. Why on earth did silver's price pump before the recent Iran strike? That's not how this is supposed to work. So we're going to dig into the key players and what might be behind this really strange market mystery. Okay, first things first. To really get just how bizarre this whole situation is, we need to set a baseline. Let's take a look at what normally happens to silver when a war kicks off. Historically, the pattern is super consistent. A big conflict starts, and then everyone rushes into silver for safety, which causes that price spike. That initial pump usually cools off after a week or two, and then a more gradual, steady climb begins. The key thing to remember here is that silver reacts to events. It doesn't get ahead of them. But this time, totally different. We saw this massive 6% jump the day before the strike even happened. This shatters the historical pattern, and that's what kicks off our whole investigation. So what gives? Was this just some wild coincidence? Or was someone with very deep pockets or inside information making a huge play? That question leads us straight to our first suspect. Let's talk about suspect number 1, COMEX. It's one of the main places where you trade contracts for commodities like silver. And lately, they've been having a series of, let's just say, conveniently timed technical problems. Now, just look at this timing. It's almost too perfect. On 2 separate occasions, right as silver's price was about to break through a really critical level, the kind of breakout that could send prices soaring, trading just stopped. The official reason both times, the servers overheated. And yeah, the official story has been met with a whole lot of skepticism. The source narrator here is sarcastically blaming it on silly Barry in IT, which, kind of highlights how unbelievable it seems that the exact same critical failure would happen twice at the exact same pivotal market moment. So here's the potential motive, the case against COMEX. Their physical silver vaults are at the lowest they've been since 2010. If the price really pumped, it could cause a run on the tiny supply they have left. And if they can't deliver the physical silver, well, that could shatter confidence in the entire market. And what's really strange is that when the main servers failed, their backup systems in New York were never even turned on. So you have to ask, were these glitches actually just a way to slam the brakes on the price? But hold on, COMEX isn't the only one in the hot seat. Let's turn our attention to suspect number 2, a really powerful new player who just made an absolutely massive move into the silver market, Jane Street. So, on paper, Jane Street is a top-tier global trading firm. They're a heavyweight, known for using super advanced tech and math. In short, these guys have the power to move entire markets. However, according to some folks who watch the market closely, they've earned a less flattering nickname. They call them Pain Street, and it's for the financial pain they allegedly inflict on everyday traders. And that name didn't just come out of nowhere. The source points to a whole history of controversy. There are allegations of market manipulation in India, accusations they had a hand in the 2021 crypto crash, and of course their connection to the FTX disaster through their famous former employee Sam Bankman-Fried. And we are not talking about small potatoes here. This number, $600 million, that's how much of Jane Street's assets were reportedly frozen by regulators in India during an investigation. It just gives you a sense of the scale we're dealing with. Okay, so here's the crucial part. You've got this firm with this, let's just say, colorful history, and now get this. They have just become the single largest holder of SLV. That's the biggest fund in the world backed by physical silver. They now have this massive position right before this completely out-of-the-blue price pump. All right, let's take a breath and try to weigh the evidence. We've got 2 very different suspects on our hands. On one side, you have the incumbent exchange, COMEX, that keeps having technical difficulties at the worst possible moments. And on the other, you have this powerful new player, Jane Street, with a very questionable track record and a brand new enormous position. So let's just break it down side by side. COMEX's action was halting the trading. Their motive? Pretty clear. Prevent a price breakout because they might not have the physical silver to back it up. Jane Street's action was a huge purchase. Their motive? We have no idea. But the source points to a history of alleged manipulation. So you have this incumbent that seems to want to keep the price down, and a new player with the power to send it to the moon whose intentions are a total black box. So where does that leave us?
Honestly, it's a mess. You've got these two giants seemingly at odds, one trying to keep a lid on the price, the other making a massive bet that could blow that lid right off. And this conflict alone creates a ton of uncertainty. But they aren't the only forces at play here. I mean, you've just got so many moving parts. Is Jane Street really pulling the strings here? Is COMEX actively suppressing the price? And then you throw in these other wild cards, like a report about some mystery trader who made a $500,000 bet on the strike happening just 71 minutes before it did. Or maybe, just maybe, the simplest answer is the right one. It was just regular folks like you and me who saw the low supply at COMEX and decided to buy in. It's a total fog of conflicting information. And when you're faced with all this chaos, what are you supposed to do? Well, here's the conclusion from the source narrator. For the average investor, trying to outsmart government insiders or multi-billion-dollar trading firms is basically a fool's errand. Their advice? When the rules are this murky, maybe the best move is to just step away from the table. And really, that's the question we're all left with, isn't it? In a market where you might have an exchange trying to hold prices down, a new giant with a history of alleged manipulation, and insiders who might know what's going to happen before it happens, what is the smartest, safest move for the individual investor? It's definitely something worth thinking about.